Consumer confidence has eased. The FNB BER sentiment indicator edged 1 point lower in the fourth quarter and has come in at -6. That declines have been attributed to deteriorations in the economic outlook and household finance sub-indices. Despite the dip, FNB says it's the highest reading since before the COVID-19 pandemic broke out, and it expects retail tills to jingle much louder this festive season. The lender cited a much improved willingness to spend compared to last year's peak trading period and an increased ability to spend bolstered by low inflation, 50 basis points of interest rate cuts and an estimated 40 billion rand in the two-part retirement system payouts in 2024. Tiger Brands says it's delivered a robust year-end performance. SA's largest food producer has reported a marginal increase in revenue, citing price inflation of 7%. Headline earnings per share, meanwhile, came in 4% higher. The firm says its performance in the second half exceeded expectations, and it's declared a final dividend of 684 cents. That takes the total payout to 10 Rand 34, which is 4.3% higher than a year ago. Looking ahead, Tiger Brands says it expects continued pressure on consumer spending, but management remains optimistic for the year ahead. It plans to invest further in its power brands and expand its presence in key channels, including general trade and exports. Exxaro's CEO Nombasa Tsengwa has been placed on precautionary suspension. That's as an investigation has been launched into allegations related to workplace conduct and governance practice. The company says the decision is in the best interests of both the company and Tsengwa, and that the probe will be conducted by law firm ENS. Exxaro's board has appointed CFO Rian Kopeshar as acting CEO, and says the company will be guided by the outcome of the investigation before taking the appropriate action, if any. Resilient REIT has upped its 2024 dividend guidance after posting higher retail sales during the 10-month period ended October. The retail-focused property group says it's anticipating distributions of about 428 to 433 cents. The upper end of that range is just over 1% higher than the projection shared in August. The firms added that this assumes that Lighthouse achieves its guidance, that there's no significant load shedding and no further deterioration in the macroeconomic environment. Resilient owns just over 30% of Lighthouse. Supergroup's lightening its portfolio. The transport and logistics company is selling its 53% stake in SG Fleet Group, and that's in a deal worth 7.5 billion rand. Supergroup says the disposal is in the best interest of shareholders and will, among others, provide shareholders with an opportunity to unlock the material value in SG Fleet in the immediate term. The companies added that after paying expenses and settling debt, it will distribute about 16 Rand per share to shareholders. SAA is facing some turbulence. That's as pilots have issued the carrier with a notice to strike from Friday after protracted wage negotiations reached a stalemate. SAA says it's doing everything possible to avoid a strike or any disruptions to its operations, especially during the December peak season. Interim CEO John Lamula says the pilots have chosen to go on strike exactly on the 5th anniversary of the day SAA was placed in business rescue in 2019. He's added that SAA cannot return to lucrative benefits that the pilots have historically enjoyed, and that acceding to current demands for a 15.7% wage increase will trigger SAA's decline into bankruptcy. In international developments, Amazon has announced a new slate of artificial intelligence platforms, these known as foundation models and allowing for text, image and video generation, among other things. Here's more details in this package report.
Amazon has unveiled a slate of new AI models. Dubbed Nova, they'll handle work like text, image and video generation. Amazon says that could have direct benefits for sellers on its website. They could use it to, for example, turn still images into short videos for promoting products. Chief Executive Andy Jassy said the new models are a response to customer demands for AI that performs better and costs less. He revealed the move at a conference in Las Vegas on Tuesday. It pits Amazon against rivals like Adobe and Facebook parent Meta. They're all racing to serve customers who want to automate more of their services. Jassy also said the firm would soon release a version of its Alexa voice assistant enhanced with AI.
Alexa, please turn on all lights.
Reuters has reported that the project has been plagued by delays amid concern over the accuracy and speed of the bot's answers. Amazon has been criticised for lagging rivals in the race to exploit the new technology. However, the company's head of artificial general intelligence, Rohit Prasad, said Tuesday that it was still very early in the AI era. He says that gives Amazon plenty of time to catch up and take the lead.
And 4 of China's top industry associations have urged Chinese companies to be wary of buying U.S. chips as they are no longer safe. This in a rare coordinated response to Washington's curbs on Chinese chip makers. Here's more insights.
Chinese companies should be wary of buying US chips as they are no longer safe. That was the warning from 4 of the country's top industry associations, who also said firms should buy locally instead. It was a rare coordinated response to Washington's curbs on Chinese chip makers. The statements did not detail why US chips were unsafe or unreliable. The warning arrives after the 2 nations targeted each other's economies over the last few days. It's escalated tensions even before US President-elect Donald Trump returns to the White House in January. Trump has promised to impose heavy tariffs on imported Chinese goods. The move would revive a trade war from his first 4-year term as president. On Monday, the US launched its 3rd crackdown in 3 years on China's semiconductor industry. It curbed exports to 140 companies, including chip equipment maker Naura Technology Group. Tuesday's call from Chinese industry bodies to buy local could affect US chip-making giants like Nvidia, AMD and Intel. Those firms have managed to keep selling products in the Chinese market despite export controls. The 3 companies did not immediately respond to a Reuters request for comment. The Semiconductor Industry Association is a US trade group representing major chip holders. It responded to the coordinated call to limit procurement of US chips as unhelpful. It further argued any claims American chips are no longer safe or reliable are simply inaccurate. The group also encouraged both the US and Chinese governments to avoid further escalation.